investor behavior.
It absolutely is. Pompliano details what he calls the Wall Street versus Main Street divergence. He presents some pretty clear evidence that Main Street investors, meaning, retail individual investors, they've been pouring capital into the market at a historically high pace.
Okay.
He cites figures showing $122 billion in equity ETF net inflows year to date just for retail. And this apparently accelerated dramatically since mid-March, with retail inflows actually doubling during a period where some might expected them to pull back because of volatility. Retail investors, he notes, have been net sellers in only 6 trading sessions since March 1st.
It's only 6 days of selling since March. So Main Street is aggressively buying the market. What are the professionals Wall Street doing in contrast?
It's a stark contrast. Institutional and professional investors have actually been withdrawing capital. They've seen $25 billion in withdrawals year to date. Pompliano interprets this as professionals either sitting on the sidelines, maybe waiting for a dip that hasn't really materialized in a big way, or actively selling into the strength that this retail buying is creating.
And the retail investors, who are often, caricatured as less sophisticated or the dumb money, they're actually succeeding with this strategy, making money.
According to the data he presents, yes, they are. He quotes global market investors showing that retail investors have effectively bought every single dip this year. And the key result, the S&P 500 has returned an average of about 0.36% on days following a down day. That's apparently the highest average return ever recorded following a down day.
Wow.
He explicitly mentions that retail investors have purchased over $50 billion in U.S. equities just since the low point back in April.
Profiting consistently just by buying every dip.
Hmm.
How does he explain this apparent success of, decentralized retail action? It's not like they're coordinating in a room somewhere.
No, he sees it as collective action happening in a decentralized manner. These individual investors acting independently, but perhaps, sharing information and sentiment online, have kind of coalesced around one simple core mentality: buy the dip. And their combined buying power, which has been persistent even through minor sell-offs, is effectively setting the market's direction and rewarding that very behavior. He says, the market is the ultimate referee, and in this environment, it really seems like retail is more than holding its own against the pros.
It's fascinating, isn't it, to see Main Street potentially leading